HT Smartcast.
You are listening to a Mint production brought to you by HT Smartcast.
Hi, Why Not Mint Money is a daily podcast on personal finance that helps you get smart about managing money. We help you understand basic money concepts to keep you from making bad money mistakes. Why Not Mint Money is your one-stop solution to money matters. So, let's get started. Welcome to your money journey.
In the past few years, the government has taken many steps to reduce compliance burden on senior citizen taxpayers. One such move was announced in Budget 2021, which said that senior citizens aged 75 years and above and who only have income from pension and FD will not have to file their ITR form from the current fiscal. How will this rule be implemented is what we are going to discuss in today's podcast. Hello everyone, I am Shipra from Mint Money. And today I have with me Karan Batra, who will tell us about this rule.
Hi Shipra, thanks for having me on the show. I am Karan Batra. I am a chartered accountant by profession and I am the founder of the website charteredclub.com, wherein we try to simplify taxes for the common man.
This week, the tax department released Declaration Form 12 BBA to implement this rule. So Karan, why don't you tell our listeners about what this form is and who needs to fill it?
Form 12 BBA is a form which has been recently released and anybody above the age of 75 who intends to claim the benefit of Section 194P has to submit this form to the banker. This form can be submitted by people above the age of 75 and anybody who has submitted this form is exempted from the requirement of filing of the income tax return. In fact, in such a case, the banker will do all the necessary compliances of say filing of returns or payment of taxes for the person above the age of 75. However, it is important to note here that this form is applicable only if the person has pension income or interest income or both, and both the incomes are coming in the same bank account.
Alright, so from what I can gather that this rule will significantly bring down compliance burden on eligible senior citizens. Apart from this, how will the new rule help senior citizens from the hassle of getting refund on FD interest deduction?
If a person has submitted this form, then the banker will do all the compliances on behalf of this person. In fact, in such a case, they will deduct the TDS in such a manner that neither does the person have any tax payable or refundable at the end of the year. And thus people to whom refund is due because of excess TDS deduction won't have to get into the hassles of a refund because excess TDS would not be deducted in the first instance itself. In such a case, the TDS would be deducted keeping in mind the income tax slab rates of the person in mind and not at say flat 10%. We are here referring to cases where Form 15H is also not applicable because the income was taxable.
Can you explain this with some calculations?
Sure. Say for example, a person has taxable interest income after claiming deductions of rupees 6 lakh rupees. Now in such a case, the Form 15H cannot be submitted because the income after deductions is taxable. And therefore flat 10% TDS will get deducted in such a case which is equal to rupees 60,000. Whereas the total annual tax payable by this person as per the slab rates would have been much lower. In fact, as per the slab rates, for a person aged 75 years, up to first 3 lakhs, there is no tax. From 3 lakhs to 5 lakhs, it is 5% tax which is levied, and above 5 lakhs, which in this case would be say from 5 lakhs to 6 lakhs, 20% tax would be levied. Thus, the total tax payable as per the slab rate works out to rupees 31,200. I am mentioning this amount inclusive of cess, which is 4%. So, in this case, the TDS deducted was 60,000 rupees, whereas the tax payable is 31,200. This difference basically leads to a refund. The higher TDS which has been deducted, the person will claim a refund of the excess 28,800 which has been deducted at the time of filing of income tax return. This is what was happening till now. However, if a person has submitted this Form 12 BBA, then the TDS deduction in the first instance itself would be of 31,200 rupees, keeping in mind the income tax slab rates of the person, and therefore a case of refund will not arise. To reiterate, the TDS deduction would be equivalent to the tax payable, which will ensure that there is no refund or tax payable at the end of the year. Thus, apart from the exemption of filing income tax returns, such person would also be exempted from the hassles of claiming an income tax refund.
Well, that was a very insightful conversation we had with Karan today. Thank you very much for joining us, and we hope to see you in our next episode.
Thanks for listening in. We're also available on Livemint.com, and if you're old school, then do pick up a copy of Mint for some insightful coverage. If you have any questions you want us to address, do reach us out at HT Smartcast. We are present on Twitter, Facebook, and Insta. And if you want to connect over email, write into us at mintmoney@livemint.com. Until next time, it's bye-bye.
This was a Mint production brought to you by HT Smartcast.
HT Smartcast.